Hi and welcome to Symax Fintech's weekly report. Two parts to this. First one's sort of macro and what's been going on in the markets and what's we anticipate. And then the second half is technical analysis on a few products. So I hope you enjoy it. First of all, our disclaimer. If you're trading already, you'll know this. If you're new to trading, then please take notice even more so that trading involves the risk of loss of capital. It's not suitable for everyone, although we hope it is for you. And as many companies provide leverage, just be careful and be aware that you can lose substantially more than your initial investment. Everything we're trying to produce here, views, opinions, all the information that we're adding is just purely for educational purposes. We're not trying to give you advice or encourage you to trade or anything. And it's something that, you should definitely really sort of consider, especially the risks that are involved, your financial situation, definitely your level of experience, and also your risk appetite. And you should only risk capital that you are prepared, but more importantly, that you can afford to lose. If you've got any doubts whatsoever, just seek some independent financial advice and do that before you risk your capital. So first of all, we're going to look back at last week. So non-farm payroll on Friday, surprised, it was a beat on the upside. The labour market is so tight in the US that I think it did surprise everybody, actually including me. But it just shows how strong the market is there at the moment. Their unemployment remained at 3.6 when I thought that may have dropped down to 3.5, but it's stuck at 3.6. But when you look at the jobs versus, the jobs that are available against the sort of unemployed, it's almost 2 to 1. There's practically 2 jobs for every person that's unemployed. And earnings were pretty flat. Central banks just carry on committing to fighting inflation, and obviously they keep mentioning and warning us that rate hikes are still going to keep coming. And that is in the majority of the world. China, Russia, different. They're actually cutting rates and trying to stimulate their economies, obviously for different reasons. And of course, now we're into June, the Fed will start to reduce their balance sheet. Probably not fast enough for my liking, but at least they're going to start. The stocks, now we're seeing institutional titans from like JP Morgan's and Goldman's and others voicing a warning on the markets just in general, stocks as well. So, just be a little bit cautious there and do some research and reading for yourself to find out what they're saying. Oil, again, was a bit of a surprise, ended the week really strong at the highs. And that was despite the fact that the Saudis said that they're willing to increase supply. It still ended up through $120. And Biden has sort of suggested that he may visit Saudi soon. And of course, maybe that's sort of to try and create some sort of form of relationship there, try and get the oil prices lower if possible. USD's off the highs, but it still had a steady week. So here we're looking at the key data for this week. For the EU, obviously we've got the ECB meeting this week, so all eyes will be on that. I still can't understand why they're waiting for July for their first rate hike when they could start this one. Factory orders, trade balance, GDP, so lots of data coming out. UK-wise, not very much, so I haven't bothered with that this week on this list. The US trade balances again, so trade balances are important for currencies, so keep an eye on it for that. And of course we've got CPI, which is going to sort of give us even more of an indicator regarding inflation. Now with CPI, just remember, look for the core CPI. Don't worry so much about the more general. Look for the core. That's the one that the pro traders focus on. Consumer sentiment. We account for 70% of an economy, so that sentiment is really important. If we start cutting back, that's going to reflect in the stock market right across the board, and potentially that is going to start to happen. generally most people have got less disposable income, and therefore, they're having to make some hard decisions. And then for commodities, we've got the WASDE report. Um, just quickly, in Japan, we've got GDP, China, CPI, and in Australia, the central bank decision from there as well. So macro outlook isn't changing very much. We've still got inflation, high inflation, probably peaking in my view, but just remember that is my personal view. Shrinkflation, it takes on a different couple of forms. Either you get less for your money, or just the inflation's just shrinking everything. We've got stagflation, and we've got the potential for stagflation, and of course we've got potential for recession. I don't see them very short term, but I do see them 2023 at the moment. Again, just my opinion. We've still got those supply chain issues, and it doesn't matter how much central banks put rates up. That yes, they can affect us as individuals, as consumers, but they can't cure supply chain issues. They can't cure not having enough people to take up the jobs, and all the other various things that are going on. And of course, Russia's invasion of Ukraine now has passed 100 days. Energy and food prices continue to increase, although at a slower pace. There's still that lack of workers. Earning pressures are still there, but not quite as much as they have been. I think we're going to start to see a lot of these things level off now. And of course, some of the EU states may be heading for a recession, and at the moment, France is a likely candidate for that. There seems to be a bit of unrest again in France, even though Macron's been elected president, ahead of France again. And I think for that, what it is really is just that people didn't want Le Pen to be president. Otherwise, he probably wouldn't have got it. But they're stuck with him for another 4 or 5 years now at the moment. So, will he be able to do good things? He's been coming out with some strange comments recently, so we'll have to wait and see. Trading tip of the week. So this is about risk reward. If you're trading, you've really got to have strong risk management. So what is risk reward? And what it is really is a calculation that we use to identify the potential loss against the potential profit in a trading opportunity. And, we calculate this before we enter the trades, not after. Me personally, I look for a minimum of 2 to 1. Now, I'm not always going to get that. Sometimes the market won't quite give that to me, so I'll have to settle for a little less. You have to remain sort of flexible in trading. So if, sometimes I might only get 1.8, 1.7, something like that. Other times, I'm going to start to sort of see that I can get more for some of my trade, and I might move that to 3 to 1, 5 to 1, 8 to 1, 10 to 1. I want to maximise my profit in every trade, but I'm sensible. I'm not going to get too greedy. I'm just going to watch and see what the market will give me. And of course, depending on what your risk reward is, will impact the winners to losers. Of course, if you've got 2 to 1 or above, if you only win half the trades, as long as you're controlled with those losses, you still come out ahead. So, just bear that in mind. So now we're going to move on to technical analysis. And in here, we're just going to sort of look again at the sort of the same charts as we do each week, daily and 30-minute charts. It's just to give you a little bit of insight, just to get you sort of ready for the week ahead. Again, this is just what I've seen by doing some analysis. Feel free, obviously, to do your own. You may see better things than I do. So the first one we're going to look at is the Dow. Now, what I've changed now is when you've got these sort of horizontal blue lines, what I've done is I've used them to dissect the trend lines. So it's actually giving you a value rather than you having to guess what that price is. And then the sort of reddy maroon color, whatever that is. That the reddish ones, they are just normal, sort of where I've sort of identified maybe multiple highs or lows and such like. And that's going to be the same for all the charts coming through now. So it's just to give you a little bit of an advance warning of what that indicates. So as we see last week, the stock market, after its rally from the previous week, it held up, but it couldn't really make much progress. And the majority of that, I would say, was people was waiting for the non-farm payroll data on Friday. Of course, that's out the way, but the market still sort of was a little bit negative. It didn't really know where to go. So tomorrow is going to be interesting. Well, Monday, I'm recording this very late Sunday. So, but Monday's openings, it's going to be interesting to see where we go from there. This is the 30-minute. Again, identified a resistance level up there. It's been there for a while now. And then I've added in sort of where the lines dissect across the trend. So we've still got, short term, a slight sort of bearish market, but that's the short term, not the long term. The markets have been in a bull run for over 10 years. Moving on to the S&P, similar situation. Managed to get a trend lines in there. Trend lines are always in black as well, just so you notice that. Horizontal lines, that red color is just sort of showing where there's multiple highs or lows. And just to re-emphasize that the other lines, the blue lines, are just where they sort of dissect as we go into trading. On the 30-minute, we sort of managed to get a support line in there. It's towards the lower end of the scale at the moment. We've got that obviously big arch there that we've seen over the last day or two. It sort of the stock started to make a good recovery and then just pretty much gave it all back. Resistance is on there, support lines on there, but we're much closer to the support at the moment if it's going to hold. When I see things like this, I always look to the left to see how much activity there is going on to the left, because that's going to give me an idea, if it does break that support, where the next level's going to be. And that's obviously very important. One, because I may actually want to go short if it breaks that level. Others is I want to know how far it can continue to go and where the next level of support is. And that's what we're always trying to do. Look for those levels all day long, each and every day. So on the S&P, I've added the pivot points as well. So as we can see on Friday, it started higher. It sort of broke through the pivot point, came down to S1, which is the first level of support. And then it sort of pretty much got sticky towards the afternoon until the close. It just sort of stuck next to that S1 level. So again, we'll get new pivot points for Monday. So we'll wait and see where they are and how the market reacts. Of course, we've got lots of data out this week, so markets will break out of some of these. It's just going to have to wait and see which way they're going to go. Again here, so this is the Nasdaq on the daily. Again, a couple of good resistance levels, solid resistance levels higher up. Probably coming into a little bit of resistance on the opening. So, if it opens higher, again, it's going to be interesting to see where it goes. If it opens lower, then that could be a little bit of a rejection and it will hold that resistance line in. So again, stocks this week, it's going to be interesting to see if they can hold up or, whether there's a little bit more bearish sentiment coming back into the markets. This is the Nasdaq on the 30-minute. Again, good strong resistance levels higher up, trend line up there as well. But again, we've got sort of support levels lower down. So it's a bit of a combination. But again, we can see that arch. Obviously we tend to sort of get the same sort of shape on most of the indices, and that can be different sometimes because obviously it's made up of the tech companies.